On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's up, everybody? It's your boy Reckless Ray Dinero, and we are back at it again for another Robinhood portfolio update, coming at you a little bit later in the day. I am recording this day of, because I had stuff to do Thursday evening. So we're getting our day started. We're going to start off with this. Going to be an instant premiere. So basically it gets uploaded, will be instant premiered, and you guys will be able to view it, and I will share it to all the platforms. It'll be great. Hopefully you enjoy it. As you're filing in, make sure to hit that like button. Don't forget to, if you haven't already, hit that subscribe button and hit the bell notification next to the subscribe button to have all notifications on, so that way you know when I drop these updates. You'll probably notice with the thumb, what we're doing moving forward is at time of recording, I'm just going to pull the data from Robinhood, and that way you'll get to see the portfolio balances as it grows or declines. You never know. Like, I might not be good at this. So, but as we're growing it out, I'll go ahead and do that, so that way you guys have context on when we're talking about where the income's coming from. Durka-dee. We're not quite at... Oh, and don't forget to share the video. Get me out into the algorithm. We're doing really good on getting new subs in. Shooting for 500. Once we get to 500, I'll start doing some live streams. So we'll add live streams, and I got a couple of other things that I'm planning on adding. I've got some incentivizers, some new stuff that'll unlock as we grow the channel and the platform. We're going to go ahead and just jump right into it. This is pretty straightforward. So I don't understand why everybody seems to have a discerning hatred for showing portfolios, but I do not. It's just, I don't know. It just gives me, it weirds me out when there's no context. And the reason it does is because anyone can make a spreadsheet and plug numbers into it. Like, anybody can do that. Anyone, literally, you, me, anybody. Anybody can just plug numbers into Snowball Analytics. I love Snowball Analytics, but like, if I wanted to, I could lie on there. And I'm not saying that some of these quote unquote gurus are lying, but I will say a lot of them make a lot of money off YouTube. And a lot of them never show their portfolios. And I mean, it just gives me the ick. I don't know. Call me woke. It's icky. It just, you're talking down the mountaintop with some sense of authority, and we've never seen your portfolio. Like, that's crazy. Like, brokerage accounts don't even show whole account numbers. It's crazy. So, with that said, I always start mine off before we go into Snowball Analytics with the data. So, as we can see, market's taking a dive. We're trying to get back into some ranges. They're duking it out. Now, what I really like about this portfolio, obviously, this has become a very theme campy portfolio. Very Robinhood based, Ulti as the underlying foundation, and then we're getting out into some Robinhood hood covered calls, ETFs to generate some more income. We've also added in our moonshot, which is moonshotting. So what we do first, obviously, we can see we're at $5,996.72 actively being traded. We're in the midday session right now, towards the end of the midday session, going into the afternoon session. We'll go ahead and give the shares. Obviously, Snowball Analytics is only going to be tracking 2 of these, the income, but I go ahead and give you guys the rundown. So that way we've got, accuracy and transparency, because the numbers don't match, because I am not tracking 2 of the 4 positions that are in here right now. We've got 5 shares of Hood. We've been on Robinhood's platform for 5 months. We've shifted over. The Robinhood Gold Card is my daily driver. I'm probably going to do a video on that on Bag Talk. I'll probably do a Bag Talk episode on how we're utilizing that card. The Hood, we got 5 shares of that. Ulti, we are up to 776.81 shares. I did do a buy today this morning. Ulti took a hit and everybody's freaking out, but basically the entire market's down. The S&P 500's down, QQQ is down. A lot of stuff is down. Fortunately for Hood, we are up on Hood. It's down from the peak that it hit, but like we are up. I'm greened up on everything that's Robinhood related, more or less. We've got Hooey, HOOY. We have 13 shares. We'll be buying another share come Monday because, unfortunately for Robinhood, one thing that annoys me about the platform, they don't pay my dividends until after hours, like way after hours, like 7, 8 o'clock after hours, like when they feel like it after hours. Like, quit playing with my money after hours. So one thing I don't like about this platform, and it's the reason that this is the lifestyle portfolio and not my primary portfolio, because like that would be super annoying to me. And then last but not least, we have our Moonshot, which is Open Door. We are targeting getting 100 shares, dollar cost averaging on that, and then letting it sit for a couple of years. Actually, we'll probably have over 100 shares, as it's currently the only Moonshot that I have. And the way that works for me is I buy roughly about $100 at the beginning of the month, and I add it in with my Hood share purchase, and it's just a little something that I do. I'm doing it over on Robinhood because, it's the gambling platform, sit and hold, like be able to do some stuff. So with Open Door, we are at 50 shares, and then moving forward, we'll just put $100 in a month until I find another potential Moonshot or something that I would like to add to that, and we'll do that. So couple more weeks, we will be buying another $100 worth of shares. We are up on this position. It is very volatile. It's a mover, and I find that interesting. We're looking at a 2-year time window on open, so I'm going to be putting some reminders in there so that way we can, track that position. Obviously, we'll be able to track what our average cost is and profit loss, whatever, within the Robinhood app, since it's just a stock. So that's what we've got for there, but we're here to talk about income. So Ulti, we are not quite at $100 a share, but we are at covering buying entire shares of Hui, which is awesome. So like we're able to get one whole share without having to dip into the margin. Our goal over here is to get to $100 a share, and then Hui will become the primary landing page space for all the money that comes in. So then when we get paid, we'll be buying shares of Hui and then you'll also be getting the dividend off of Ulti going into Hui as well. And hopefully, as we waterfall this down, switching the focus over, we'll get Hui up. And once Hui gets to $400 for the month, we'll be able to open up the next position, which down here on our watch list, we have How. And then we're also going to be adding in AVGW. Probably while the iron is hot, we will be doing How, HOOW first. AVGW will come after that, and then that'll be, it'll be Ulti spills into Hui, which spills into How. And then once we get How to $400 a month, How will spill into AVGO, and then we'll just go back to just sitting our money in Ulti. And that's kind of the way that I'm going to build this portfolio. I don't want to manage a bunch of positions. I don't want to be looking and chasing the next latest and greatest. AVGO has been doing exceptionally well in regards to how they're the options trading on it. It's been a stalwart. It's kind of like a balanced offshoot, but like obviously this space that we're in right now where it almost looks like, you know, my open door position is doing really well today and Robinhood's doing really well today. But it seems like everything else is just in the red. I looked at my primary portfolio. It's brutal. It's getting brutalized over there because everything's down. And so when I see stuff like that and the market is down, I will go and check QQQ and SPY to see if the majority of the market's down. If the majority of the market's down, there's no reason to freak out, in my opinion. We're going to go ahead and jump over to Snowball Analytics, and I'm going to bring you down, stop screen, and then we're going to share a screen, application window, bring up Snowball. Okay, so this is the context. Got to have the context. We're sitting at $5,508.35. Our passive income percentage. So I'm going to start reinforcing the stuff that I look at so that people understand how I make the moves that I make. Our passive income percentage. This is important to me, very much so. And I like it to be between 80 and probably, I would say 80 or higher. 80 is the lower end of my threshold. I will go as high as possible with risk that I am comfortable with. Right now, we are sitting at 93.31, which is awesome. That's great. Almost 100%. Portfolio is looking great right now. We're looking at a return over the next 12 months. This obviously changes as we go through, but we're looking at $5,213.16. Total dividend received so far is $908.68. You can see where we started. February, we got $1.50. Come March, we are at $25.21. April, we pulled $83.22. And as you can see, we were trying to do a whole lot. We were doing the thing that I understand now as a content creator. I also understand as somebody who has been doing this for a year for the high yield specifically. You put a bunch of stuff in there. People put stuff in there just so they have something to talk about. And like I was like, I don't make my money here. I don't just need something to talk about. I'm documenting my journey, of course, but like I don't need like 6 positions. Like, come on, man. Like that's just like it should have been focused. And then as it's growing, but we're growing. And then in July, we kind of started doing some pivoting. So we're and then now in August, we're at 76 so far. And I think moving forward, I like the focus portfolio aspect. I am from now on moving in positions until they get to around $100 if it's a weekly, $400 if it's a monthly, before I add anything else, before I make any adjustments. And I'm going to just cycle those. And like once we start getting close, we'll be able to just do what we need to do. But I'm in a good range here, so this is projecting, and obviously we're fighting to get down from this because our goal is $30,000. We're at 17% of the goal right now. This would be achievable in 3 years, doing exactly what we're doing right now, which is basically, I think it has like a bare minimum of what's being added in here, but like as the slow trickle, we're building up this portfolio slowly. We're about to start, after we get some stuff done in the primary portfolio, we're going to start shifting our focus towards using some of these debt tools to get this portfolio up to snuff, because that portfolio does cover everything that it needs to cover right now. I do want to get my secondary position started in there, so I'm probably going to have to run the debt tool, specifically the Cash App, a little bit longer, so that way we can. Well, actually, no, I won't, because I will need to let that start paying down debt. So we will be shifting our debt tools over to this portfolio. So there's going to be some influx, a little bit of a speed up, because we're going to use the Cash App play over here, and yeah, we'll start seeing these numbers go up a lot more. Total profit, we are at 18.5%, which is awesome. Profits that we've gotten back so far, $1,073.87. Let's go take a look at our holdings. I do like to give you guys a breakdown on that. Ulti, we done dipped into the red a little bit. Our cost per share is down to 627. We're just a little bit down. We're not even 1% down. This is acceptable. And these are metrics that I track because I'm looking at about 15% off the NAV that I will cut bait. Now, considering we're not 100% reinvesting in Ulti, that's spilling over into Hui. That's also kind of hedging our risk factor on that, because I'm not just infinite dripping into Ulti now that we've got it up to a position. And in Hui, we are up a little bit. On the daily, we're barely up, not even 1%, but overall in total profit, we're up 6.3%, which is awesome. And yeah, we're gonna keep it rolling. The important thing is following the process. We're trying to. Oh, I didn't even put that on the screen. Oops. There we go. Now you can see it on the screen. You guys got to hear it, and I'm down in the bottom corner, so you guys got to see the money, which is cool. But the important thing that we've got to keep in mind here is following the process and like getting a process. So like I normally try to not make shifts until I reevaluate quarterly is the way that I do these accounts. So like I'll start a plan. We run the play for the quarter, because like a full quarter, you got 3 months, you're going to see some results. Now, some things take longer. So for instance, the open door, that's a 2-year play. So we just keep buying. And like if it's dipped and the price is down, because it is very volatile, we buy a little bit more. Obviously, I have my sell-off metrics. So like if we hit 100%, we're going to clip some of that and like put it into cash, hold it on the side, and wait for a dip to buy back in. If it dips below cost average. Outside of that, though, like we are very long this position. I want to get as many shares as I can for the long run of my 2-year window, and then we're going to see what it does. But for my income, you can kind of see where you're at within those quarters, like the decision to pivot in my primary portfolio and pivot out of Misty a little bit, because I don't want it to be a primary position because its current distribution is below my threshold. So I've got to get some of those shares off-boarded and something in-boarded, which in this case has been Ulti, to get that back within my threshold. So that way my passive income threshold is where it needs to be for me to be happy with the portfolio. So, you start doing strategies like that. Does that mean you can't buy back into Misty if it starts performing again to add those shares back and sell off Ulti? No, it does not mean you can't do that. You can definitely do those things. It's managing for the cash flow. I do not care about the growth. I don't care about I just don't care about the growth on the NAV. Like my NAVs, my portfolios, and now that we're tracking the Robinhood, which is a smaller portfolio, you'll get to see I have income coming into the portfolio from my W-2. This is an income acceleration play. I'm not sitting there having this be my only portfolio. As you guys see on my updates, on my portfolio updates at the beginning of the month, I have multiple portfolios. They have different focuses. They're not doing the same thing. My other portfolios, my long-term portfolio does not produce income for real. Probably won't, because of the plays that we're going to have in there. My Bitcoin holding doesn't produce income. Some of my DeFi stuff does produce a little bit of income, but it's not as consistent as this. So like this will be getting those funds moving forward. And yeah, like it's about the strategy of it. It's not that I'm doing anything super complicated. I'm very focused in what I'm doing. It's just everything has its job and they all work together synergistically. I'm not sitting here just doing one thing. I don't set drip and forget it. Like I'm just going to buy more ulti every month. Like no, because what if it goes down? What if it tanks? What if the distribution is cut in half? Then I have to be ready to pivot. I have to have stuff on board. That's the reason your watch list is so important. And what I've learned is I'm not keeping my watch lists flooded anymore. And I have to clean up my watch list over in my Charles Schwab for this exact reason, because it needs to be focused to the portfolio. I have 4 things on my watch list in my Robinhood portfolio right now. And as it comes into the portfolio, I remove it from the watch list because it's not a watch list in a position anymore. It's in the portfolio, so it doesn't need to be on the watch list. But that way, if you have to pivot, you should already have your backup options set out. Like if ulti were to drop 15%, I'm out like around that 10 to 15% mark on my total return NAV, or actually on the NAV probably. Between 10 and 15%, I'm looking to start transitioning out of that position for me personally, because I don't want to take that hit in that regard, especially if it's the NAV has dropped. And I mean, and this is after I'm positioned, of course. Like while I'm buying, if I'm not to my income ratio yet, then I'm buying my average down, which means that 10 to 15% window gets lower. But at that point, especially if like for instance with Misty, if the NAV and the distribution rate are dropping in tandem, and I'm familiar with the underlying, and I know that the underlying is going through like a little bear market phase, I'm like, okay, we're going to minimize that position at that point because there's no reason to be in it. And then, have to ride through it as though like I'm emotionally tied to this position. Now, if it was my MicroStrategy stock, yes, because that's a long-term play. Misty is an income play. If it's not producing the income I need, or your position's not producing the income you're wanting out of it, or it's messing up your whole ratio because that's your primary holding, it's okay to pivot out a little bit. I mean, I didn't go dump all my Misty and buy ulti. Looking hindsight though, it might have been a better idea, instead of dollar cost averaging out, to have sold more to get into the position faster. But I didn't do that. I dollar cost average. I'm doing 50 share blocks, selling 50 at a time, probably going to be doing one today. And I kind of try and do it once a week. And, to go ahead and get some more ulti in there and, pivot that over, because Misty has dropped both NAV and has dropped in pay and distribution. So now my passive income percentage on my primary income portfolio is performing worse than my lifestyle portfolio that I just started. It's not the greatest of feelings, not the greatest of ways to go about doing that. Also with Misty, it's stuck with their call options for a month. They can't even reposition. So like it's not like it's getting like they can pivot throughout the month to where like every week's just bad. Like every week's just bad on theirs if stuff goes sideways like now. So those are a couple of my thoughts. That's what we're doing moving forward in the portfolio. We're going to get my ulti position to where it needs to be. And then we will begin making we're going to continue paying off the debt with that portfolio, but I just want to get it to where it can do it a little bit more efficiently. And yeah, that's all I got for you guys today. It's been another Robinhood portfolio update. I'll be back again next week. If you have not liked the video, subscribe to the channel, and go ahead and join the Wolfpack. I want to formally invite you, because we're not trying to get rich over here by ourselves. And there's always room for more people. So do that. Don't forget to share the video. Don't forget to hit the bell notification and turn all notifications on. And until next week, it's your boy Reckless Raiden, and I'm out.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.